Despite a lot of momentum out of the gate, Palantir's stock price since IPO has seen a lot of drama. There are a lot of people coming up with a bunch of different complaints and worries and concerns about investing in the stock, but today we're going to talk about those. So a lot of people have brought complaints about Palantir stock, saying things like they're too dependent on government income, they have too few clients, and therefore if they were to lose one, they would be shredded. Other people, George Soros included, say that this is just a tool that the government's going to be using to be spying on people more and more, and therefore it's too dangerous to be allowed to grow. And other people have been complaining that Palantir is just riding the coattails of the IPO and, I guess, SPAC boom of 2020, saying they're just in it to make a bunch of cash. They've come out with their 2020 earnings report and fourth quarter earnings report, and we're going to be going over that as well as addressing a lot of these different concerns that people have brought to the plate. And you guys know I've been invested in Palantir, so I'm going to be sharing my thoughts based on this information that they're sharing with us in this earnings report as well going forward. So first, I wanted to jump right into the slideshow. There's a lot of cool information here. First, our business grew significantly in 2020, 47% revenue growth with 17% adjusted operating margin, 21 deals signed in fourth quarter, each worth $5 million or more, 12 of which were each worth more than $10 million or more. So right out of the gate, they already know a lot of people's concerns about the company, and they're saying, hey, we're working with more companies, and a lot of these companies are starting to pay more and more money, but we'll get into that more in a sec. Check it out here on one of their slides. They're showing their government clearance, basically. They're saying there are a lot of different companies that work with the government, including Google and Snowflake and SAP and Salesforce. Here are the different clearances: IL2 SaaS, IL4 SaaS, IL5 SaaS, IL6 SaaS. Palantir's already at IL5, which says it accommodates DoD, CUI, and national security systems, and they're saying they're about to get to level 6, classified secret national security system. So Palantir breaks down their business sectors into like public and into government and a couple of other ones, but they're saying, hey, we're one of the few people that has achieved this really high clearance. And so that's, number one, really reassuring because the government loves to work closely with really big companies. You can see, for example, all of the aerospace companies they've worked with over the last many years. But also, number two, they're going to be making more money from the government and loyalty will be increasing because there aren't any other companies they can work with at these high clearance levels. But also, number three, they're working really closely and the government is seeing value in working alongside them and therefore probably be willing to pay more for various projects, but also maybe giving them access to various other things. This is interesting, but it's also a little bit tricky because a lot of this stuff we probably aren't going to be allowed to know about. So for example, in a minute, we're going to take a look at the research and development costs that jumped up big time. They settled down again in the fourth quarter, but probably a lot of that is just kind of like, we don't know what they're researching. We can't know because it's classified. So we just got to trust you guys. Moving on, they showed in 2020, we helped 100 commercial organizations and 10 national governments respond to COVID-19. They went on to share a bunch of their different achievements and how countries like England have had one of the most successful rollouts, partially in thanks to the work that Palantir is doing alongside them. They also went on to address the complaint that a lot of people were bringing against them that they're too government-centric for their income. Check it out here, commercial business. In 2020, we generated 107% revenue growth from our U.S. commercial customers. That's just U.S. commercial customers. In the fourth quarter of 2020, we signed several large deals across automotive, energy, healthcare, insurance, mining, shipping, and more. And $482 million makes up 44% of the total revenue. Thank you very much for the great graphic design that they've provided there. But this is really interesting because they're showing not only strong growth in the commercial segment, but similarly to the effect that you get when you buy a Tesla. So there's this really weird phenomena that's happening with Tesla. Typically, there are a lot of people, like a huge segment of the market is like, I only buy $20,000 or $25,000 cars. I only buy Corollas or like really basic Camrys or these kinds of cars, Civics, stuff like that. But what happens when you step up and you're willing to spend 30 or 35 or 40 grand on a Model 3, it sounds stupid because you're spending more money. But when you multiply the cost savings of gas and maintenance, which you don't have to worry about ever again with an electric car over the next 5, 10, 20 years, like the proposition almost becomes foolish. You know, I'm not saying Tesla is 100% better for every single human than a Honda or a Toyota is. But new technologies are coming out that save you so much money that it's foolish not to get into them. And we're seeing that with Palantir. They're coming in, and if you're not really familiar with what Palantir does, basically every company has huge amounts of data, and they don't know how to use that data to come to better conclusions for moving forward. But a lot of the data seemingly like isn't actually useful for making decisions. But when Palantir comes in and implements the really big systems, and in some cases their team comes into the company as well, basically you can set up the system to be like, whoa, we can use all of this information we'd never really used before to make a decision that will either save us huge amounts of money or help us to be more efficient in a big way, or help us to change our trajectory going forward. And so they're basically a software company using crazy data mining and AI and stuff like that, but they're doing it at such an advanced level compared to a lot of the competitors like Alteryx or companies like that, that a lot of the companies that end up working with them end up saving so much money that it's like, dude, it would be stupid for us to stop working with these guys going forward. And so you don't hear a lot of contract cancellations, and you don't hear a lot of people being like, yeah, we spent a bunch of money on Palantir and it was stupid, so we quit, or it didn't save us money, so we quit. On the contrary, you hear a lot of cases where people are like, we have to keep them on. It's stupid for us not to keep them on because they saved us more than we paid them. You know what I'm saying? And so we end up seeing a bunch of things like this. Signed a significant expansion with a Fortune 50 healthcare company to support their contract management and already generated $50 million in annualized value. Another one, expanded our work with BP to power net zero emissions corporate strategy. And this first point here is pretty cool. Generated more than $1 billion of value in 2020 through a digital twin and simulation system in Foundry that recreates every drop of oil across BP plants in digital form. So setting up a digital twin is basically taking the entire system and making a duplicate of it in digital form. And then you can figure out where there are inefficiencies. You can figure out maybe how to upgrade little certain parts or components or the way staff work on things and stuff like that. So they've already generated more than $1 billion in value for BP. They're not receiving $1 billion, but now BP obviously is going to be like, oh my gosh, these guys are killing it. They're saving us so much money. We have to keep working with them going forward. Another one, expanded work with a Fortune 200 company and enabled a key transformation of their order fulfillment system in under 2 weeks. Another big problem with consultant firms and things like that is that a lot of times it ends up taking months or years before you get usable data. In this case, under 2 weeks. They're just like, boom, our system, boom, analyze all the data, boom, here are some big decisions you can make that are going to change your whole ordering system. Oh my gosh, Palantir, this is mind-blowing, this is world-changing. And when you start to understand how drastic the changes can be, you start to get why people like Cathie Wood are just like, oh my gosh, we're totally getting in on the ground floor. And it really wouldn't shock me if we start to see the stock price going ballistic over the coming years. Going back to the government business side of things, indeed they do work with a lot of big governments. Check it out here. $610 million in revenue from government customers in 2020, making up 56% of total revenue. They said in 2020 we generated 77% revenue growth, so it's not as fast as the commercial side, but it's already bigger than the commercial side, so that's fair. In quarter four, we signed several large deals that underscore our vision to provide the central operating platform for government and our focus on the near-peer fight in defense. And so typically, governments aren't always the smartest. Typically, they're not always the most creative and the most flexible in the ways of being like, hey, we heard there's this new technology, let's give them a call and try it out. Like, it's not that easy with government organizations. So it's pretty likely that once Palantir starts to implement systems, these are going to be like the benchmark, the foundational systems that the governments build on top of that going forward in the years and maybe even decades to come. So Palantir is really good at putting themselves in a spot where they're providing huge value, but also partnering with allies. And they're also really clear about, hey, we're not going to work with China, we're not going to work with Russia. We believe in America being the leader of the world, and we need to work with our allies to continue to build those kinds of relationships. So we've seen them working with the UK government. They already work with a bunch of Japanese companies as well, and I think we'll probably continue to see that growing into the future. They also work really closely with military agencies, and I'm going to share a couple of bits of information from their earnings report as well. Check it out. Expanded the Vantage program and enabled Army to free up $3.3 billion for reinvestment. So basically, they step in and they say, hey, Army, let us figure out some things. Oh, here, we figured out a way to get you $3.3 billion extra out of all the things you're already doing. Now you can reuse that money for different things, for different investments. And I mentioned the England pandemic thing earlier. Check it out, signed a 2-year, $31 million contract with NHS England, that's their healthcare system, throughout which the UK vaccines program has ordered, allocated, tracked, and delivered all vaccines through Foundry. So Foundry, one of Palantir's really big systems, is powering the whole healthcare vaccine rollout thing. That's how central they are to the whole UK health system right now. Moving on to the other complaint that a lot of people have, saying that they're too dependent on too few large companies. Check it out, they've addressed that in one of their slides. In quarter 4, 2020, we closed a large number of deals across our commercial and government segments. 21 deals signed in the fourth quarter, each worth $5 million or more, 12 of which were each worth $10 million or more. In 2020, we generated 47% annual revenue growth. On the left side, revenue from our top 20 customers is increasing from $495 million up to $663 million. On the right side, customer concentration of our top 20 customers as a percent of total revenue is decreasing from 67% to down to 61%. So they're saying, hey guys, we hear you, and what you're worried about is no longer the case. That concentration is decreasing. They're also showing the average revenue per customer going from $5.6 million in 2019 up 41% to $7.9 million in 2020. We continue to grow our pipeline. Customers in the acquire phase in 2020 generated $77 million in 2020 revenue. And they also say we continue to grow our customer relationships at scale. The number of customers generating more than 1 million, more than 5 million, and more than 10 million in revenue on that illustration on the right side is up 50%, up 54%, and up 32% respectively. And this is only the beginning. Our customers only so far include 8 of the Fortune 100, 12 of the Global 100, and 24 of the Global 300. And they're really confident that as they grow in notoriety, as they grow in popularity, and people are starting to see the value they provide, and also kind of start to understand that they're not just some meme stock taking advantage of the IPO boom, a lot of companies are going to be like, oh my gosh, our competitors have used them and they're saving boatloads of money. Now we must use them too. And I'm sure that's going to start happening in the coming years. Going into some of the financials a little bit more in detail, in 2020 we generated $1.093 billion in revenue, up 47% from 2019. Check it out here on the right side, they have the full year, and on the left side they have the quarter 4. In quarter 4 2020, our government segment generated $190 million in revenue, up 85% year over year. In contrast to that, fourth quarter 2020, our commercial segment generated $132 million in revenue, up 4% year over year. So as far as revenue goes, it's not as big a jump as the government segment is. But in that first paragraph there, 2020 overall, US commercial revenue grew 107%, aided by investments in account-based sales force and channel partnerships. So they're saying fourth quarter was good, but the whole year was really crazy compared to 2019. Going on, we generated 84% adjusted gross margin and 62% contribution margin in the fourth quarter. We generated $104 million in adjusted operating income. So this is where we need to be a little bit careful because they say adjusted operating income has gone up a lot. But one of the really tricky things when looking at that is that if you just look at the GAAP numbers, it looks like they had a loss in EPS. But when they adjust, when they say adjusted blah, 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 or non-GAAP EPS, it basically means, hey, there was some big one-time expense. We're going to write that off and ignore that so that we can compare apples to apples over the years. And so what happens when a company goes public is that, first of all, in 2020, which they did, they needed to pay something like $870 million to the banks that take them through that whole process of going public. You might have heard of the word SPAC, Special Purpose Acquisition Company. SPAC is a different way of going public versus the traditional IPO way of going through investment banks. And it ends up being a lot cheaper, which is one of the reasons they're becoming so trendy. So Palantir had to spend all this money to go public in 2020. And additionally, when you go public, you got to give your staff, you got to give the people who've been building the company up stock in the company. And so all of a sudden, boom, you have this huge expense that comes in because all of a sudden you're giving your staff stocks, which costs a lot of money. And so you're going to see this big like negative appear on the sheets. And what ends up happening is a lot of people look at that and be like, oh my gosh, they lost so much money. Even though they're growing, they lost so much money. This is foolish. But you got to take a look at the balance sheet. You got to take a look at the financial statements and figure out kind of where that's coming from and realize that some of these are only one-time expenses. Going on with some of the financials, by the end of 2020, we grew revenue and generated positive contribution margin across all 3 phases of our business model. So they have 3 different phases of their business model: acquire, expand, and scale. I go into that in my previous video a little bit more in detail, so click up here if you want to see that. But check it out. Growth in all 3 segments, which is dope. So in 2019, new customers brought in 12 million of revenue, but in 2020, new customers brought in 42 million. So they're saying our new customers aren't just like, small fries. We're starting to bring in bigger and bigger projects, bigger and bigger organizations, and they're also paying us large amounts of money, and the number of them is also increasing. Therefore, new customers are worth a lot more this year. They go on to talk about their long-term orientation, 5-year outlook, revenue of 4 billion or more, 4,000% growth they're expecting. I think that math works out to that. Correct me if I'm wrong down in the comment section. Full year 2021, they're expecting revenue growth in excess of 30%. And in this quarter, revenue growth of 45% with an adjusted operating margin of 23%. Check it out. Here is a hyperchart. If you like this and it helps you understand things, click on the link below in the description. I have a link to hypercharts. Operating expenses. So this is just breaking down sales and marketing in the red, research and development in the yellow, general and admin in the green. We saw in the third quarter of last year, all of them blew up. But thankfully, pleasantly, it settled back down drastically. But one of the really interesting things that we need to be paying attention to is R&D is getting bigger. And that goes back to what I was saying at the beginning, where a lot of these projects are confidential. We can't really know what's going on. Now, if these R&D investments end up paying off, it could end up being explosive growth going into the future. We just have to trust them with that. And if you're investing in Palantir, I think it's wise to be investing for 2023, 24, 25. And so that's what I'm really excited about with the company. There are a few other things that have come up. The executive team get paid a crap load of money, between $12 and $26 million a year. Some people are arguing, saying, dude, your company's too young to be doing that. Keep the expenses down so you can start raising the profit margins. But really, Palantir is super clear. Like, if you're investing to make a gain like in a few weeks or in a few months, like, we're not the company you want to be investing in. And I'm firmly in this company long-term, 2025, 28, 30. I think it's going to be blowing up. I think we're seeing how powerful this can be and how all of their clients are just going to be needing them and depending on them more and more and more. I agree with the leadership's perspective on things and also with their generally conservative outlook and management of the funds that they have. There are a few other concerns. What concerns do you have with the company? What is stopping you from investing in them, or what is stopping you from investing in them more if you already do have Palantir stock? Looking forward to hearing your thoughts down below. Thank you guys very much for your time. Hope this video was helpful. I'm going to keep investing in them going forward, dollar cost averaging in, and hope you guys have a great week or weekend. I love you guys. Talk to you soon.